Joining us now is Mark Fields. He is the former CEO of Ford, as well as a CNBC contributor. Mark, it's great to have you on this pretty big deal, I would assume, in the industry. And it's interesting, I don't want to take too much of a message from one day, but the shares of Toyota and GM and Ford were actually up on this news. Pretty acknowledged that global auto capacity perhaps is too high. Do you think that's the case? Do you think this potential deal would do anything to help that out?
Well, I do think this deal is really about, Nissan has been in a long-term sales decline. They have a lot of debt. They have dwindling profits and cash. And at the same time, they recently had an activist get into their stock. And also at the same time, Foxconn, the Taiwanese manufacturer, made an advance to them. And so I think this really pushes Nissan to approach Honda, and it probably was helped by the Japanese government, the Ministry of International Trade and Industry, because they want to make sure they protect these, Japanese blue chip companies. But I think what you'll see is, listen, they have too much capacity right now. Nissan, I think this year is running at about 65% capacity utilization, which anytime you run below 80%, you lose a lot of money. So in this case, I think for Honda, the benefits is it gives them scale, gives them access to potentially, some truck technology that Nissan has. And in Nissan case, it gives them, a partner, and it allows them to restructure. So I think you'll see capacity come out of the industry. But make no bones about this, Mike. This is about the Japanese government really wanting, two major auto groups, Toyota and their group of companies, including Mazda and Subaru, and Nissan and Honda, to protect them from the onslaught of more competitors and a lot of new technologies.
Yeah, and you mentioned just the need for scale, and it's such an interesting position that so many of these companies find themselves in, which is just massive necessary capital spending and research expenditures for whatever the energy transition is going to be to ramp up electric and hybrid capacity. At the same time, the payback is getting a bit unclear, and China just keeps building capacity in that area. So on what basis are all these companies making these new investments in terms of what they think they're going to get out of it?
Well, I think what you're seeing, you've seen this in the auto industry literally over the past 12 to 15 months, right? Prior to that, there were a lot of investments in EV capacity and components, and they thought the market was going to adopt to EVs very quickly. That has not happened. So you've seen a lot of automakers all around the world basically write off capital expenditures. So there was a lot of stranded assets that they've had to write off. And so I think you're seeing going forward this pressure, even before the amount of investments, the profit on EVs is very elusive. The only ones in the industry making profits on EVs is Tesla. You layer on top of that a slower industry, and that's forcing companies to make really tough decisions about rolling back these investments, writing off investments as well, and driving them into partnerships, because they're going to need these partnerships to spread these investment costs, because they just don't know how fast the market is going to uptake on EVs, and therefore they want to create a hedge.
So in addition to this one, Mark, do you see this spurring other partnerships, joint ventures, and even some mergers in the new year?
Well, Leslie, it's a great question. First off, I see more partnerships. I do not see a rush to consolidation in the industry, because let's face it, this Honda-Nissan merger agreement is really a bit of a shotgun marriage because of the issues at Nissan and their dwindling profits, and the fact that they've misread the market, particularly here in the U.S. And so I think a lot of this was being thrown into their arms, not only because they're looking at their own numbers and a lot of debt due in the next 2 years, but also the Japanese government saying, we think you ought to do this. But in the rest of the industry, I continue to see more partnerships. You're seeing it with folks like GM and Hyundai. You're seeing it with others, and I expect that to continue. But I do not expect to see a rush to mass consolidation. If for any other reason, these are national champions in these countries, and the governments really want to keep these companies headquartered in their own locations. So for in-country mergers like you're seeing with Honda and Nissan makes a lot of sense.